Hi, I'm Alex, welcome to the channel and thanks for tuning in. So in today's video we're going to be talking about BFT and Paysafe stock again, and specifically we're going to be looking at the lockup following on from my previous video which I covered it on. Now this video is partly following on from my previous video I did on the lockup, so if you haven't seen that video then I definitely recommend checking that out first. That's down in the description below and linked either up there or there. Now this video is one of several parts. All of these are addressing the lockup issue, however they're all fairly discrete points and address different angles of it. As a couple of these points I'm still digging into, I thought it best to share this with you as soon as possible. Now in the other videos on the lockup and on BFT and Paysafe more generally, I've been given access to a couple of pieces of information which are not available in the public domain but which are really important to us as investors. So you definitely don't want to miss those videos. Make sure you're subscribed to the channel so you don't miss those. I've also had some other people suggesting that my videos aren't showing up on their homepage for whatever reason. So the best way to make sure you don't miss it is by hitting that notification bell, and that way you'll be notified when it's uploaded. If you like the video, please smash the like button. It's so helpful in pushing the channel to a wider audience, which on topics like this I think are really important to address the information asymmetry there currently is. As always, I'm not a financial advisor. This video is purely for educational and entertainment purposes only, but let's get straight into it. Now, subsequent to me releasing my first video on the lockup, I have noticed a couple of videos coming out and saying the same things. However, unfortunately in those videos, there are a couple of misleading things said in those, so hopefully this video is also helpful in clearing up those. Now the most important thing here to other people who may be creating videos is not to sensationalise this. It's a lockup period. Every IPO has a lockup period, 99% of SPACs have a lockup period. It's not a warning sign, it's not a short sell opportunity, it's just a lockup period. It's the same as every other lockup period, however there are just a few dynamics which make this different and for us as investors which are important to know about. Whilst sharing this information with the investment community is so important, what's also even more critically important is sharing information that's correct. Sharing wrong information is worse than not sharing any information at all. Whilst that is important for this stock, that's also important for the whole of finance YouTube in general. When you share information, it really has to be correct, it has to be fact-checked. It shouldn't be misleading. That's just ultimately detrimental to the community. However, let's get straight into it. Now, the other important thing to say here is that if you are a long-term investor and you're prepared to weather any potential dip in share price, which may occur following the expiration of the various lockups, then again, this isn't a concern for you. This should only affect those who either are short-term investors, are medium-term investors, or those who want to try and play the opportunity here which may arise. It goes without saying that as investors, this could go wrong, obviously, but it's so important for us all to be aware of. So one of the main questions I've seen is, why is this lockup period so important for this SPAC versus other SPACs? 99.9% of SPACs have some sort of lockup, whether that be on PIPE investors, whether that be on some of the founders, the sponsor, management. In the majority of circumstances, there is a lockup period. However, what's different here is the nature of the shareholders with the company which is being merged with, i.e. the shareholders of Paysafe currently. They are private equity investors, and as I touched on in my previous video, the private equity model requires companies to be sold. Now there are some specifics here, which I'll touch on in another video, which enable us to understand exactly how long Blackstone and CVC can hold their stake in this SPAC for, and additionally, the ways that they may go about exiting and selling their stake in the company. This is so important and you don't want to miss this one. Now the reason for this SPAC that there's greater focus and greater scrutiny on the lockup period is because in the SPAC market this year, the dynamic has been that it's less common that the shareholders of the company being merged with are financial investors. The large controlling stakes which we've seen in many of the other SPAC mergers this year have all been held by management teams or founders. They don't have the same incentive as a financial investor does. So the dynamic is different and ultimately it needs less focus. Now I have seen people suggest that actually the triggers shortening the lockup period are cause for concern. This is not the case at all. Those are very commonplace, but again, it's worth knowing. Check any other IPO prospectus. Check other filings from other SPACs. It's commonplace. It's not a warning sign. That should not worry you. The important thing to know from this is ultimately it's likely that the trigger will be hit and that the lockup period will be shortened. The important takeaway from this is ultimately Blackstone and CVC combined own 2 times the amount of shares that the shareholders currently in BFT will own of the combined entity. That's the important thing and the impact that will have on the price when they come to sell. Now if you're a long-term investor, this isn't something that should worry you. Yes, in the medium term there may well be a dip in the share price, however you just need to look at the relative valuations of other companies in the sector. Look at the investor bases of those companies. There will be investor appetite to acquire these shares, however that many shares being sold at one period of time may have an impact on lowering the price. As we've discussed in the other price target videos on this channel, on the basis of that analysis, the company is fundamentally undervalued at this point in time. There will be investor appetite for those shares, and so it will recover from any dip. So the next point I want to discuss is around the timing of the lockup and the point in time which that lockup commences or the countdown starts. Now looking at this chart, you can clearly see firstly that I'm not an artist. However, I stress this is very high level. It's just to help clearly explain the point. Please don't come at me in the comments saying,
"Oh my god, you've not put the correct timing of the DEF M14A filing here."
It's high level. Bear with me. However, let's quickly go through the key points of this. Now, the first one here is the raising of the SPAC. This is where units are sold to investors for $10, and from that, cash is raised and kept in a trust. Now, that cash is ultimately the cash that's used to help acquire the company. Now, typically, the SPAC will have 2 years to consummate a transaction. If it takes longer than this, the shareholders can vote to approve to extend this. However, if they don't complete the transaction within this 2-year period, and shareholders don't extend this, then the cash gets returned to shareholders. Typically, the SPAC is raised with a strategy, a sector focus, or some sort of focus in mind. Then you go into the period labelled A, where the SPAC then identifies its target and is searching for an opportunity. When the SPAC finds its target, it will issue what's known as an LOI. What this outlines is the SPAC's intention, its background, and its desire to merge with the company. It will propose a valuation in here, and ultimately it will list out a number of key DD items and requirements that the SPAC has for them to get comfortable on their valuation. The target company and the SPAC then enter negotiations, and the next stage is the definitive agreement. At this point in time, an investor presentation comes out, we get more detail on the company, we get more detail on the transaction. If there is going to be a PIPE to help acquire the company, this is the point in time typically we get that information and that disclosure. The next key event then is the shareholder vote, and this is the point in time where every shareholder in the SPAC votes on whether they want to approve the transaction. If this is approved, a couple of days later the merger will be effective, that is the effective date, and that is important, so we'll come back to why that is the case in a second, but this is the point in time which the ticker changes. This effective date is the date which the lock-up countdown is effective from. The merger is effective, it's complete. So every day that passes is a day that comes off the lock-up period from then. It's then also from this point in time, which Paysafe, as it will be trading as then, if it does trade above $12 for a period of 20 days, it will then trigger that early clause within the lock-up period. Obviously, people who are saying if it's trading above $12 now, that is incorrect. It's only, again, from the effective date, the date which the ticker changes. Now again, some brokers may take a couple of days to update this. That doesn't change anything. The effective date is the same effective date for everyone. Now the next thing to discuss is why there are different lock-up periods for the private equity investors, CVC and Blackstone, and the PIPE investors. And in this point, when we talk about the PIPE investors, we're also talking about the founder shares and the management shares. Now this actually is important because this would not be the starting negotiating point. Blackstone and CVC have negotiated to ensure they have a shortened period. Looking at this from their perspective, you can understand why. They will have concern that perhaps the PIPE shareholders would sell their shares. They've not been invested in this opportunity for as long as Blackstone and CVC had. As a reminder, they invested in the company initially in 2017, taking it private, buying a company that was listed on the stock market and delisting it. In one of the other lockup videos, we'll look at this in more detail and understand why this is also so important. So make sure you're subscribed so you don't miss that. But back to the point, Blackstone and CVC have negotiated a shorter lockup period than the other investors. And understanding the impact this may have is important. Now we will address this point in another video in much more detail. However, if Blackstone and CVC did have intentions to hold their investment in the company for a long period of time, as people are suggesting, then why would it be important for them to have a shorter lockup period than other investors? Now we will address this in much more detail in the other video that I'll upload to the channel as soon as I can. Ultimately what this means is that there is a window of opportunity where Blackstone and CVC could sell their shares without there being an impact from the PIPE also trying to sell their shares. So to help explain this point a little clearer, I've done another diagram. Again, I'm sorry about my drawing and handwriting. This time we start from the effective date, the point in time which the ticker changes and the lockup countdown starts. On the orange dot we see that's the 20-day marker, where on the basis of our previous video we've assumed that the share price has remained above $12 and ultimately the shorter lockup is triggered. This means that on the 80th day following the effective date, Blackstone and CVC are able to sell their shares. 80th day because you have the 20 days where you're testing whether the share price is remaining above $12 for any 30-day consecutive period, and then the 60-day period thereafter. What that gives Blackstone and CVC, as you can see by the pink line and the letter A, is the period of 90 days where Blackstone and CVC are able to sell their shares whilst the PIPE investors are still subject to their lockup. As a reminder, assuming that early trigger, it's 150 days thereafter, so 150 days plus the 20 days. Now, as investors, this is really important to keep in mind. Either you want to make sure you've sold your investment before the expiration of Blackstone and CVC's lockup, if that's the strategy you're going to take, or alternatively, if you're a long-term investor, you do have to expect some turbulence in the stock price, certainly in this 90-day period, and then for some period of time thereafter, if the PIPE shareholders do seek to sell their shares. But again, just to clarify, it is just a lockup. It's not a warning sign, it's not a call to short sell, it's just a lockup. As investors, it's important we know about it so we can make the right informed decision for us and for our own investment strategies. If you're a long-term investor and you're not worried about that potential dip in price, it will recover. That's fine. You just need to be aware of the period of time where there may be some turbulence. Alternatively, if you're looking to sell your shares before the expiration of the lockup and potentially try and acquire shares for cheaper, then you need to be aware of the window of opportunity there. Again, there's no guarantee that this will be the case. But look, thank you so much for watching. If you like the video, please smash the like button. If you're new to the channel and you like investor related content, then smash the subscribe button. And I also really recommend, if you're interested in BFT, hitting that notification bell so that you are notified when the next video I have on the lockup is uploaded. That video will look at it from a different angle. It will have information within it that's not generally available within the public domain, and again, is really important just to be aware of as investors. As always, please let me know your thoughts and comments in the comment section below. I find it so interesting to hear all the opinions, debates, perspectives, so please get involved. But thank you so much for watching, and I'll see you in another video.